All right. What's going on, party people? This your man Griff. Look, we gonna get right into it. Y'all know what time it is. It's time to get them notary taxes together. There's really no such thing as notary taxes, but it's your business taxes for your notary business. So we got the number one tax guy in my life and should be in yours, my man Rob Turner from Pay It Tax Accounting Service, professional accounting and income taxes. I always mess that up, but you know he gonna come on and straighten me out with that. So here's my man Rob. I've been with him for over 20 years, and I very rarely ever say the full name of the business. I always just say Pay It, which I love it. And then I say, you know what? I'm just all messing my man. So it's professional accounting and income tax. I got it over here on the screen so I can see.
Okay, all right.
There we go. So I got it straight. So Rob, man, the floor is yours. Feel free to give the people an introduction because since the last time we've done this, I've gotten a lot more subscribers, a lot more eyes watching the channel. So feel free to give them a little brief history about yourself, your background, so they'll, people got to know you know what you're talking about. So
I
go
got
for
it.
it.
Hello, everybody. My name is Rob Turner. I am a tax accountant, very experienced. I've been doing this for right at 30 years now. Griff and I have been working together for about a little over 20 years. The biggest part of what I do is I help people make good business decisions. And so I share with folks all the time, be leery of what your friends, relatives, and coworkers recommend you do if this is not what they do. So um, I'm here to help you at whatever it is that you need me to do to help you. But again, the biggest part of what I do is help you make good business decisions. And so from time to time, we get together, and right now is a perfect time because it's time that you're gathering your documents and papers together to get your tax return done. And so I'm going to touch on a couple of particular topics today. Uh, Being the market that you're in has somewhat changed since COVID. Prior to COVID and with the interest rate as low as it was, a lot of people were refinancing, a lot of people were buying, a lot were selling their properties, but things have slowed down now. And so, Griff and I talk from time to time. He's letting me know that, many signing agents, uh, are making a tough decision because, we're all in business to make money. So if you can't make money, oftentimes you got to look at, what's really going on in your business. And, oftentimes you just got to decide to move on if things aren't working out for you. So I'll be talking about, uh, you know, shutting down or closing your business. And many people think, well, I'll just stop doing business. Well, there's quite a few steps to actually, uh, the proper way to close your business. Um, and, you do it in the correct manner so that you'll stop getting these notices and you'll, stop being liable for certain fees and penalties. And so the first thing uh, I recommend that you look at relative to whether you're going to continue in business or decide to close your business is uh, you got to decide to. You need to assess, your business operation um, and follow your articles of organization to uh, you know see what is the proper way to shut down. But there are several things that you need to do, and so I think many or most of the signing agents have created LLCs. Excuse me. And so one of the key things that you have to do is with the Secretary of State, depending on what state that you're in, is you got to uh, file some articles with them to let them know that you're no longer doing business so that they won't continue to assess your annual fees and charge you interest and penalties, because you haven't taken that step. Another thing you do is, file your final return with the business. And of course, with that is your federal, your state, and to pay whatever taxes that you owe. Don't just leave that hanging, because if you made money, IRS, they're going to come at you. So, the right thing to do is, file that final return, let them know that it's, the final return, so you can, they know you're closing the business. Also, there's some local, I don't know if, which of you have gotten a business license in the local area where you are. That's another place where you need to let them know that, you're closing your business. And again, all of this is based on trying to, two things. One, let them know that you're closing business. The other thing, you want to avoid, any potential fees and penalties because you haven't taken those steps. Another thing you want to do is cancel the name of the business. You want to advise different creditors and vendors that you're dealing with that you're also shutting down in business, so that they won't continue, to call on you. And, at some point it could seem like they're hassling you, but just let them know that you have moved on into another entity. Another big one is to if you have employees, is to take care of your employees. By that, I mean, pay their final wages, file all of the necessary employment tax returns, and pay the taxes that are due. Another thing you want to do is to cancel your employee ID number. Well, you basically put it in a hold status. You also need to close your bank account. So again, there's quite a few steps, not just stepping away, but there are quite a few steps. If you're looking at, actually closing or shutting down the business, there's quite a few steps that you need to take, to do that, to get that done. Let's see. Another thing I want to talk about today, and that is many of you in the business that you're in, you may have actually done a signing, say November, May, or December, and you're not actually getting paid, or weren't planning to get paid until January. And so if you're, say, look, whether you're looking to shut your business down, what you got to consider is what form of accounting are you utilizing. And I would think that most of you, to keep it simple, are on a cash basis, which means you record income when you receive it, and you record expenses when you pay them. Well, in terms of writing off bad debt because you've done some work and someone has not paid you yet, they may even have shut their business down. That might be a mortgage company. It could be a title company. You've done some work, but you haven't gotten paid, and they're now closing their business and you won't get paid. Well, I've had people ask me the question, well, can I write this off as a bad debt? Well, the answer is, if you're on a cash basis method of accounting, you cannot write off a bad debt. Again, because you record income when you receive the income, you record expenses when you pay them. So it is simply an accounting process. If you're on a cash basis, there is no such thing as a business bad debt. If you were on an accrual basis, that's when bad debt comes into play. And I'll kind of try to explain it to you in layman's terms. When you're on an accrual basis, you actually record income when you send the invoice out. Even though you have not received the income yet, on an accrual basis, you record the income when you send out the invoice. And from the expense side, on the accrual basis, you take a deduction when when a bill is due or when you receive an invoice to pay a bill. So under the accrual method, you would have recorded the income but never gotten paid for it. That's what allows you to say it's a bad debt, because you've already recorded the income, but you never received the money. That's kind of, in the simplified version, but very critical. If you're on a cash basis, you cannot take a bad debt because someone didn't pay you. That's just the risk that you take, in business when you're on a cash basis. Um, and it keeps your life simple. Um, so that's the difference in the two things. And so you have to be on an accrual basis in order to write off a bad debt. So uh, let's see, can you switch? It's a difficult thing to, if would like to switch from one to the other, because once you switch, it's like a permanent change. You can't switch from cash basis to accounting basis. You can change during the year, but once you make that change, you're stuck with that change. And I haven't worked with many signing agents. I don't think you want to be on an accrual basis, because again, that means you're recording income even though you haven't gotten or received the income. So the accrual basis is it's a more complicated method of doing accounting. It gets you involved, and I don't know, I may go over your head, but with cash basis, it's easy to be on a single entry, keeping, again, income when it comes in, expenses when you pay them. When you switch to the accrual method, you go to what's called a double entry accounting system. And, many accountants don't even understand that. So, in the business that you're in, I really don't think you want to switch to the accrual basis of accounting. It's just so much simpler and so much, I think, a more accurate way to keep track of income and expenses is to be on the cash basis, based on the nature of, the business that you're in and how you conduct business. The next thing I'll talk about, for many of you, it doesn't matter what state that you're in. I am able to help you, get your taxes done. Um, you know, I hope many of you have either begun to use Notary Assist or Notary Gadget. Either of those, they're very similar, but they are a very helpful way to keep track of mileage, to keep track of income. And a big way it helps is to keep track of your notarial acts. And I'm not going to assume that you know what that is. I'll explain it to you. Notarial acts is, let's say you go to a closing, and in that closing, you sign and notarize, say, 9 or 10 documents in that closing. Well, each of those is a notarial act. And you get, based on what state you're in, you get a exclusion or discount for each of the notarial acts that you actually perform. And so I'm recommending Notary Gadget or Notary Assist, because they will help you keep track of those, as opposed to, well, as with anything, you want to keep track of things as you go along, not wait till the end and make your work, exceptionally hard of trying to go back and, keep track of the number of signings that you've had on all of the closings that you've had all year. And so those two apps are excellent way to keep track, of those notarial acts, because they save you money on your taxes, because you don't have to pay self-employment tax, or you minimize your self-employment tax. And in many cases, you can eliminate it through your number of notarial acts that you have signed over the year. Let's see. From an accounting and tax accountant's perspective, you as the signing agent mainly need your documents. If you're keeping track of that, what we have been doing, and it is very helpful from your standpoint and from ours, is I'm getting my clients to give me access to their bank login information, not to touch or to move money, but it allows me to not have to get all of these different receipts from you. It allows me to keep track of your profit and loss statements simply because I have access to your business account. And I can, as opposed to you printing a statement and then sending me that statement, which, now I've got to actually, make an entry for each of those transactions. If I have access to the login, it makes life a whole lot easier, a whole lot quicker, because QuickBooks just allows me to import your bank statements, and actually I have access to, all your income and expenses. And so, some key things I'll also point out here, just try to cover a lot of information for you, and that is to make sure that you're recording all of your business income into your business account, as well as paying all of your business expenses out of your business account. That way, it minimizes the number of pieces of paper that your preparer or accountant has to deal with. Because if everything is in your bank account, again, I mentioned, to have access to your business bank account allows me to download your bank statement, and just makes life so much easier, speeds up the process, and actually save you money. Because if I've got to go through and count and record all of the different pieces of paper you have, just kind of think of it as you being in that position. The more work that you have to do, the more you need to get paid for that service. So if I don't have to, go through every piece of paper and receipt that you have, I'm able to keep your costs to a minimum. And so, it's just critical that, one, you keep up with those documents, but you need those, as your tax accountant. I don't need to have all those pieces of paper.
So that's where you started using the Taxes to Go.
Well, that's why I use Taxes to Go. It allows, if you have documents you need to download, Taxes to Go is that's an encrypted way to send me, like, if I'm doing your tax return, I've got to get copies of your ID, copies of, different documents that way, but it's an encrypted way to send those to me.
Gotcha.
But in terms of giving me access to logging into your bank account, that's different from the Taxes to Go. That's
Gotcha.
actually helping me to keep track of your income and expenses.
Gotcha. Okay. Sounds good. Yeah. Okay. So then, yeah. So I could use Taxes to Go to scan my stuff and send it to you. and
Exactly.
everything. Because normally I can come to your office, put it in the Manila folder, and slide it into the mail slot. But this way, this will be a lot easier for me and
And you
everything.
can scan your W-2s, 1099s. It would save you. Um, I'd love to meet everybody and sit here with them in my office, but everybody's busy, so this is a way, and many of you are in different states. So this is a way that you could, use an encrypted application to send me documents because it doesn't matter where you are in the US. My software allows me to do a tax return for you. It doesn't matter where you are.
Gotcha.
And there's 43 what is 7 states that don't have state tax, and I think I think it's 8 now. But
Okay.
everybody's got to do a federal return. But
Gotcha.
the Taxes to Go has been a wonderful thing because uh, you know I've worked with several signing agents in the past, and you know sometimes they're a little reluctant, or they ask me are there documents that they're sending to me encrypted? And so
Okay.
the software that I use is created by preparers. So they realized, that was something that they needed to step, up on. So that's why they came up with the Taxes to Go. So it allows an encrypted way for clients to send documents.
Oh man,
And
that's great.
it,
Well, and everybody, that will be on the community tab of the YouTube channel, so you'll be able to see it and then scan the barcode there, download it, get it all set up. You got Rob's information down here at the bottom. You give him a call and coordinate with him, and he'll walk you through the process. Either him or his office staff will walk you through the whole process. So wow, now that's some good information. Yeah. So yeah, closing down of the business, that's big because a lot of notaries have been telling me they are shutting things down and everything. I can't tell somebody to stay in, but I just believe if they could find a way to hang in there, they will see things get better because I mean, you've been around for a long time within the economy, watching the economy, working for the IRS, and you know from experience, they don't want the housing market to crash.
oh
They
no,
don't. No,
absolutely.
the
And
banks,
so
none of that.
interest rates go up and down. The question is, can you survive your personal life while the interest rate is up right now,
Hmm.
waiting for it to go back down?
Right.
So oftentimes, what some signing agents do is they'll get another source of revenue and
Hmm.
hang in there so they don't have to kind of reinvent the wheel to keep their contacts with mortgage companies, with title companies, because it's not like the whole industry is shut down.
Right.
You just got to prove or show your worth to the different companies that are hiring. Uh,
Correct.
and one of the things I know Griff has points out all the time, and that is the more closings that you do to update your profile with these different mortgage and title companies.
Correct.
The, as you increase the number of closings, see, they want to hire experienced people.
Right.
So let's say you uh, started out and have been doing business. Well, you may be up to 100, 300 closings now. Well, when you update your profile and companies see that, they know that you're more experienced. So
Right.
they're likely to contact you, as opposed to if you haven't updated your profile, it may show that you know, it may
Still at
show your
50.
starting out numbers.
Yeah, just still show you at 50. And that's one of the things now because the word that I'm hearing is that some of the title companies are shutting down because one of the things I've learned, and this is something that I have talked about on the channel, is that there are title companies who are connected with lenders that the lender only focused on refinances and they
Okay.
didn't do any other mortgage products at all. So when that lender whoever it was, a broker or whatever, went out of business because the interest rates went up and nobody was refinancing, that particular lender did not have any access to doing reverse mortgages, loan modification, purchase deals, sales, HELOCs, or any of that. So if that title company is tied in with only that particular source and they got multiple ones, that title company is going to lose business.
Right.
So right now, so that's what's hurting a lot of people. However, the lenders still are finding ways to create deals out there, and they still need notary. So if there's a purchase or a sale, guess what? They're going to need a notary to close the deal. So even if they just do their own, work within themselves and have their own title company.
Right.
I think Rocket Mortgage has their own title company, and several others have their own title company. And they say, okay, well, we won't, heck, we'll just skip, because if the title company goes out of the business, then some of these signing companies are going out of business who hire notaries as a third party person. So then they still need notaries, but our names are still in those databases, and the lenders can reach out to you directly. And that's what I've been having happen, that they've been hitting me up directly and saying, you still in business? Yes, I am. And even in your profile, you can say you still in business, because I say that in mine. I'm still in business. During this time, I'm available. I have not shut down.
Right.
So if they see that, they know that they can call me and I'll be there for them. So that is some great information that you shared, especially about the accrual versus the cash. And I threw that question at you because I knew somebody was going to be like, well, I can switch midstream. And it's like, I didn't know whether you could or couldn't. I wouldn't do it, but I figured it would be difficult, or it could raise some red flags if all of a sudden you did.
Well, let me point something out directly related to that. You don't want to switch accounting systems because you missed out on a few dollars because the notary title company went out of business.
Yeah.
You just got to eat that.
Gotcha.
It's from the accounting standpoint, you're going to pay more for the accountant to switch you over to something that you don't understand. It's easy to understand cash in and cash out. That's the simple way. That's cash method. So for the accountant to switch you over to the accrual method, you're going to be going to something that you now don't understand. So I wouldn't recommend that you go to the accrual method thinking you're going to save money, or thinking, well, I can record that few $100s that they went out of business. It's going to cost you considerably more to switch over to the accrual method of accounting.
Gotcha. Okay, makes sense. Makes sense. So, my YouTube members, I told them we was going to be doing this video, and I gave them an opportunity to ask me some questions. So they sent me questions, and I'll ask you the question, and then you can answer them and all of that. And as you're answering them, I'll be reading, see if there's any other, and stuff. So far, none of them have been wild.
Okay.
So now, this person here, they asked their simplest. This is probably the bare bones basic question is, how do I file taxes for my business? Now, this is what, continuing with the question, they say, how do I file taxes for my business? My tax person told me don't worry about filing about filing it with your regular taxes. She said, not so sure about that, help. So
okay, I got it.
Go for it.
Again, most signing agents have created LLCs. Now, and most signing agents are the 100% owner of their LLC, or the sole owner. Well, a LLC becomes part of your personal tax return. If you're the sole owner, it's put on a Schedule C that's a part of your 1040. And so that's where it goes. In addition to, let's say you started this business, in early 22, you've made money, had some expenses, but you got some W-2, some, other things that normally would be on your 1040. So now you're adding a Schedule C and a Schedule SE, self-employment tax, and they're simply a part of your 1040 return. Now, if your LLC is owned by more than one person, what you have from the business perspective is a partnership return. That is a totally separate tax return. And so, but for most of the signing agents, what you have done is you're the sole owner of an LLC, and it's simply an additional, at least one or two forms that's part of your tax return. Again, this is what I do. I'll be glad to help you. That was an easy one. Any other questions you can think of?
Oh yeah, no, they got some other ones.
Okay.
They got some good ones. They've been sending them in left and right.
Okay.
All right. So now this one, this person asked, I purchased some supplies for my business on my personal credit card because business was slow and basically money wasn't coming in. Can I still claim it on my taxes even though I didn't purchase it out of my business account?
Yes, you can. And so what you've done is invested money in the business. The business didn't have the money you needed to supply. So what you did was invested money in the business, but the expenses still are the business's expenses. So yes, you can deduct those.
Gotcha. Okay.
Now, if the business don't have the money and you need paper,
you're right.
You got to invest money in the business.
To
so what you're able to do is you just, rather than doing it in two steps or put money into the business bank account, you went and bought the paper or whatever it was you bought. Okay. But yes, you would still get to deduct those. Gotcha.
All right. So now this one, you sort of answered it. This person was asking about, for people who are with a W-2, do they file their W-2 and business taxes together or separately? And from what you were saying is it's a part of it.
Well, they're both a part of your tax return.
Okay,
got your individual tax return. They just go on different lines on different schedules. Your W-2 goes on line 1.
Gotcha.
That's what you're used to doing all along.
Okay.
Now this business goes on Schedule C.
Correct.
Which is you're on that schedule. That's where you'll list the income and list the expenses. And then what's key here is the net number comes back to the front of the tax return just below where your W-2 is listed. But to get to the net number, it's placed on a Schedule C.
Okay.
But
so
that's all part of your same individual tax return.
All right. So his second question was, what are the main forms a business need to file, which would be the Schedule C?
So Schedule C and the Schedule SE.
For the self-employment tax.
Yes, for self-employment taxes. And that's also how we get the benefit of the notarial acts. It's through the Schedule SE. Okay.
And then this gentleman's last question was, if you didn't make any money with your LLC, do you still have to file?
Okay, now I'm gonna throw out a question. What does not making money
mean?
Okay, so not making money could be a couple things. Not making money could mean that you took in 5, but you spent 6. Well, what you actually did was lost 1. So yes, you want to put that on your return because it actually will help reduce your W-2 income.
Correct.
And I just picked some, random numbers.
Yeah.
But let's say you made 500, but you spent 700. So you have a loss of 200. So yes, you want to put that on your tax return because it actually reduces the tax if you had only put your W-2 on there.
Gotcha.
Now, that's one way of saying I didn't make any money. Another way, let's say you didn't take in any money at all. I mean, any income at all, but you were trying to do business. The key here is, were you making an effort to make money and to do business? So you were making an effort, you got cards, you created a business entity, you got employee ID number, but you just couldn't get any calls, or you just, couldn't do any signings. Yes, you still can deduct uh, those startup expenses.
Okay, because there still will be expenses
It's still
trying to do
expenses. The
expenses.
key is that you made an effort to
Right.
do business.
Okay.
I don't think I said this at the beginning. I am a former, and I emphasize former, I'm a former IRS tax auditor. So I know that side. And every year I'm doing updates of the new tax law. And so I'm telling you what I know.
Mhm. Okay.
And so
Gotcha.
again, there's two ways of looking at not making any money. One is you didn't take any income in at all.
Right.
The other is you took in less than what you spent.
Mm-hmm.
And some people just think of that as I didn't make any money. Well, what you did was lost money.
Money. Okay.
You get to deduct the loss.
Right. Gotcha. Okay. Well, all of that what you did said just answered this other lady's question, and then this next question says that they already have an LLC, and we talked about this before, but I know you're going to break it down for them.
Okay.
Yeah, I already have an LLC. Basically, they want to know, can they just add the notary to that LLC, or should they get another LLC for the notary?
Okay. So it depends on if they're related. And let me give you a real good example. Let's say you have an LLC and you make widgets. Okay. And so you said, well, I already have an LLC. I'm going to add this notary to that. So what you've just done is put all the assets from the one business and the other one, you put them all in the same pot. So, people want to sue people for any and everything. So let's say your widget business is actually making money, but but your notary business is not. And, people sue you because you look funny, or your mama dress you funny, or all kind of things. But something happens in the signing business and you get sued. If you combine those two businesses together, what you did was just expose liability of that other business, because you operated like they were all one and the same. So the limit of liability protection is there to protect you. So you don't want to combine assets from different businesses,
Mm-hmm.
not combine them from the standpoint of putting them together, but you're operating them separately. But if you kind of using the one company name, you just expose the widget business assets and money to the notary signing business,
Right. And vice versa.
and vice versa.
Right. So in other words, if you have a money hungry person out there who wants to sue you for
Yes,
whatever reason, let's just say, well, I would assume, and you can correct me if I'm wrong, if you're driving your car to an assignment, so
yes,
you're using your vehicle as a as
as a business,
for doing business, and
right?
they say, and some smart lawyer say, well, you was in the commission of doing business because
Correct.
you were driving to an assignment, you hit my client, broke their leg, killed their cat, and caused them to miss out on work, and they lost X amount of thousands of dollars.
Right.
So they're coming after your business, and you're giving them access
To
to
the
go
other,
after anything else that's tied in with that business. So
exactly.
when you lay them together, you're giving them access to come after everything that you have.
Correct.
Right. So that's the danger of it. And I think we talked about this before, like in California, from my last I was checking, they was basically saying that it costs, say, maybe like $100 or less to start an LLC in California, but each year after that, it's like $800.
Right.
So it costs a whole bunch more to keep the LLC going in California.
Right.
And a lot of people are like, well, I'll just combine them
Yes.
and all of that.
And they're taking a serious. They the whole idea of being in business is making money.
Right.
It takes money to make money. So if you can't afford to be in business, maybe you shouldn't be in business.
Correct.
And
Right.
so you don't want to combine access, and you don't want to combine assets that somebody can get their hands on.
Right. Yeah, that makes sense. That makes sense. And see, a lot of people think, well, because they have E&O insurance, which is errors and omissions, that'll protect them. Well, that protects you when you're doing something in commission or doing your notarial work.
Correct.
If you're getting sued and the act that you're getting sued for had nothing to do with your notarial stuff, your E&O insurance is not going to protect you.
Correct.
So that means you need to have spent some money on business liability insurance
Yes.
to cover you for that kind of stuff. But a lot of notaries, they don't want to spend money on the business liability side.
You
So,
got to spend some money to protect your money.
right. So they're
And
exposing
protect you
themselves.
and your money.
Right.
And so I know it seems like a, simple thing. And I share this with people all the time. Well, two things. One, I share with people, I want a big tax bill. And people look at me kind of crazy, kind of strange.
Mhm.
Why do you want a big tax bill? Well, I don't pay all the money I make in taxes.
Right.
If I get a big tax bill, that means I've made a lot of money.
Mm-hmm.
I'm going after the making a lot of money, but I'm going to have insurance to protect the money that I'm making.
Correct.
Okay, so the other thing is I help you pay the least amount of taxes that you can pay.
Right.
But the key here is making money.
Right. You got to make some money so
You got to
you
make
can
some money.
so you can have some deductions.
Yes.
Right. Yeah. And that's one of the things. And one of the things I've shared, and me and you've talked about this before, but I think it also bears repeating, is that what people need to understand as a business owner, it's about the money you bring in minus the deductions you have. That's what you get taxed on, which is the leftover. Now, if
Right.
I'm in, okay, I thought so. I'm
Well,
always like to double check.
let me put it in tax and accounting terms.
Gotcha.
All right. So what you and it kind of ties to the question the guy asked earlier. The money you bring in is gross income.
Correct.
Okay. You get to deduct the expenses from that. You get to deduct mileage and I mentioned earlier the notary assist or notary gadget or help you keep
the
up with
fees
the
for your
mileage.
stamp. Mm-hmm.
Yep. You paper, iPads, business expenses. You get to deduct those. Okay, so the key is not the gross number. The key is the net number.
Understand.
That's the number that you pay tax on, and that's
Mm-hmm.
the number that you can actually draw out of the business and use for personal. And I'm gonna go into that because that's a real big issue or thing that people need to understand.
Gotcha.
But it's that net number. It's kind of like if you're an employee, you don't get to take home the gross pay. You get what's left after they take federal tax, state tax, Social Security, and Medicare out. So it's that net number that you get to work with. So the same thing in business, it's the net number that's critical. And so, you want to make as much money as you can so that you can pay expenses, but we want to keep that to a minimum. And we want to figure out things that you're probably not even aware of that I can help you, find out that you can deduct. But it's that net number that's what's important. And so that's the number it all goes on your tax return, but the number that you pay tax on is that net number, not the gross number. Hopefully that answered that question.
Oh no, that was perfect, man.
Okay.
I was sorry, but I was running numbers through my head and stuff like that and all of that. But no, that is perfect. And so, people, you see his number down there, give him a call. He'll talk to you. He'll talk to you about the pricing and all of that. Because I know people like, well, how much you charge? If you want to find out, because
let me address that.
Go for it.
Okay, so I'll share this with you. Here locally, all this month, me and my staff, we've been calling around to other tax prep businesses to find out what they're charging for different forms.
Okay.
Because I charge you based on what forms I have to fill out. I don't care how big your numbers are. If I had to fill out a form, that's what I charge you for.
Gotcha.
So we find out what other people are charging, and we stay below that because the best marketing and business getting your word out is word of mouth.
Correct.
So I don't have this big marketing budget. So I get people to, I treat people right, give them a good price, and they send me other clients. So I'm able to, one, I already know what the other folks are charging. I can stay below that, and I give everybody a discount.
Gotcha.
So when you ask me, how much do I charge? I put it back in your court and ask you, what is the price of a new car?
$30,000 on average now.
Well,
Sometimes
but
maybe
is it a little car? Is it a big car?
right.
Is it a limited? Is it a Lexus? Is it a Volkswagen? Is it is it a
Yugo?
So if I ask you how much is the price of a new car, you say, well, I don't know. It depends on. So
Right.
That's where I am with this. It depends on what it is you need me to do.
Right.
It also depends on how much work you need me to do. Right. So let's say 2 clients come in. One has all of their numbers already totaled for me. Let's say they bring me or they send me their notary gadget page.
Yeah.
Where they've done some work and they've kept track of stuff.
Gotcha.
The other client, I got to fill out the exact same form, but they bring me a box of stuff.
Gotcha.
Okay, now I got to go through that box and make some order of what's in that box. It would not be fair to the person who got their stuff together and who brought me organized stuff.
Right.
To charge them as much as I had to charge you because you made me do all of the work.
Work for you. Yeah.
So I've got to charge you a little bit more. Correct.
And that makes sense.
So same thing, if you did a signing and it's, I don't know, 100-page document, and you do another one that's a 20-page document, you're going to want more money for the 100-page document because you're going to have more notarial acts.
Well, let me tell you something. These notaries, they just want more money, period. I'll be real with you. If they charging what they want to charge for 100 pages, they want to get paid that for 20 pages. So,
okay.
Yeah, but they get what you're saying. They get what you're saying, that the more effort you have to put into it, the more that you can charge. And that's fair, and all of that. But yeah, these notaries around here,
I try to keep it to a minimum because the reason you'll come back is I'm providing an excellent service.
That's right.
At a fair price. You'll come back and you'll, refer others. And so that's the premise that's how I operate. And
excellent.
Again, keep in mind all along the way, all year long, let's say it doesn't matter to me how we come together, whether it's through taxes, whether it's accounting, profit and loss, financial statements. To me, that gives you the ability all during the year to contact me to ask questions because it's much easier for me to help you at the time you got a question than it is to wait till tax time and say, Rob, I meant to call you back in July. Gotcha. Now we're past the December 31st, and what I may have been able to help you or guide you in the right direction back in July, we can't fix now. So don't ever feel like you're bugging me. This is what I do. I help you make good decisions.
Right. Gotcha. Well, I got 2 other questions in here.
Okay.
Well, 2 other people asked questions, so I'm gonna go with the smaller one here. Okay. So basically, he's asking, and it might be covered already in what you said, and hope he might fill out, but I'm gonna ask anyway. He said, wanted to know, how do you recommend that freelancers, independent contractors file taxes quarterly or annually?
Well, it depends on how much net income you have.
Gotcha.
That's what drives that.
Okay.
So let's say, you hit the ground running after a period of time and you're making a good income from this business. rather than waiting till I'll put numbers to it. Let's say your tax would end up being 5,000. Okay.
Right.
Now, is it easier for you to pay as you go, or to wait till the end of tax time and be mad because you got to come up with 5,000?
Right.
Now, and the reason I say that, most people, even in this business, have been employees for somebody.
Correct.
How did your tax get paid? It got paid each time you got paid.
Right.
You paid some. So it's a very similar concept of paying quarterly. If you're not making money, or if you got enough, let's say you're doing this business part-time and you got a full-time job.
Right.
IRS doesn't care where the tax comes from, whether it comes out of the business or out of your W-2. Long as when you add it all up, you paid enough.
There. Right.
So you might, if you've been getting a decent refund and you were just doing W-2 work, and you're just starting out or have made much, you may not need to do anything different. If your W-2 withholding, it might be enough to cover the net income from the business.
Gotcha.
So everybody's situation. So, you'll read and people will tell you, and I be leery of what people, stuff they tell you. You only need to pay quarterly taxes if you're making, money each quarter.
Right.
Because if you're just starting out and you just, let's say for the end of the year, you're just going to make $5,000. If that's all you've made, I mean, you could pay some quarterly taxes, but it ain't worth it to go through that.
Especially if the bulk of the money you made was, say, at the beginning of the quarter, and you didn't really make nothing else for the rest of the year, in the other quarters and all of that. So some people could be stressing themselves out, worrying about how to file quarterly tax, because they think, unless your state law says so. And I know, unless your state law says that you have to, then
even if you have to, you can put, if you don't owe any. One of the things I do for several notaries and several clients, I do monthly profit and loss statements. Okay, so as I'm doing that, I share with you, you're making enough now. I think it's time that you start paying estimated taxes.
Gotcha.
It ain't just a guess. I wonder, should I? It's based on numbers.
Right.
So if I'm doing your monthly profit and loss, I look at that and say, okay, Griff, it's time. Unless you want a big tax bill at the end,
right?
I think it's time that you start paying a little bit as you go. And this is the other part of that. Gotcha. Very similar to when you were an employee. You didn't wait to, let me take one step back. As you're making money during the year, so if you're in the first quarter, by the time you get to the fourth quarter, you spent the first, second, and third quarter's money.
Right.
But you wait until the end, and I tell you, let's say 5,000. I tell you the tax is 5,000. You've already spent first, second, and third quarter's money. So now you're trying to come up with 5,000 out of the fourth quarter's money.
Makes sense.
If you had paid, 1/4 of that each time, now when you get to the fourth quarter, you only owe the fourth quarter.
Right.
So, but
you owe a lot less.
Yeah. But it's all based on how much you're making. So if you made, let's say in the first quarter you didn't make it, you lost more than you made. You spent more than you made. Well, you don't owe any employment. You don't owe any quarterly taxes. But let's say in the second quarter, start to get warm and people getting out and they want to refinance and you made a goodly sum of money in the second quarter. I would recommend that you pay some tax out of the money that you got in that quarter.
Okay.
Otherwise, you're going to spend that money.
Right.
And when you get to the fourth, all of the money you made, you basically have spent.
Gotcha.
And you're trying to pay taxes, you're trying to pay 4 quarters of taxes out of the last quarter.
Mm.
And that's when people's like, they come up with all, it don't make sense why I gotta pay. And well, you gotta pay. If you make money,
You got to pay.
tax.
Right.
So if you're making money, pay a little bit as you go. Or some people put it to the side, put it in a totally separate account, knowing they doing that so that it's the tax, they call it the tax account. They put money into a separate bank account, knowing I'm putting a little bit in there every time I make a sale. Now I'm accumulating that so that it's not in my regular account.
Gotcha.
I'm putting some money to the side into an account to cover for taxes.
Makes sense.
Then when we get to the end and I say, okay, you got a tax bill.
You got the money already sitting off
the money
to the side.
put aside.
Okay. Now this next question, I can tell you the answer to this next set of questions for the guy. The answer is get with Rob. Okay. Get with Rob. So what his question is, he says, starting a new LLC for a notary or service-based business, is there a blueprint that novice business owners can follow to set up proper accounting practices so they can keep up with business-related expenses and money coming in? Also, proper documentation that should be retained. The answer is get with Rob.
Yeah.
He also asks, are there accountants who understand business expenses for notaries and other service-related categories? The accountants may educate the business owner on things that could be considered business expenses or tax deductible items. Get with Rob. How often should businesses pay taxes? We just covered that. Both federal and state taxes for smaller business owners. Do they require different tax forms and documentation? Get with Rob. That's the answer to that question there. And he's pretty much covered all of what those 3 questions. He covered that out of everything that he's been answering so far. So take time out and look at this video again. Yes, we've been on here an hour. Y'all know my videos always last about an hour when I do these interviews. So don't be sitting up here. I gotta look at the video again. Okay. Look at it again, because this is about your education for your business purposes. And feel free to throw some comments and questions down in the comment section and everything. He'll be watching it. I'm gonna be watching the comment section. Anything that pops up specifically, I'll make sure he gets it. Yeah. And you see his email right there. You can always email him. You can give him a call, set up a consultation, and he will get you squared away for as what you need to do for the taxes. Now,
from a consultation perspective, we can do it several ways. We can just do a phone consultation. We can Zoom. We can, so however you choose to do it. If you're local, you could come in. Whatever is convenient for you. I own the business, so if it means staying a little bit later in the evening because you got a W-2 job and that's what I do.
And just so y'all know, he's in Virginia Beach, Virginia.
Right.
I forgot to put that on the little banner.
Oh yeah, we didn't put that on there. So
yeah, so he's in Virginia Beach, Virginia, and actually about 15 minutes away from my house. Right. So if you're in Virginia, he's here for you. If you're on this planet, he's here for you. That's the best way I could put it to you. He can cover you in any state whatsoever. So Rob, man, I appreciate you coming on here, letting the people know what the deal is, answering the questions. This was great. As always, I'm learning more and more and more. And I greatly appreciate you and everything that you do for the notaries, being there for them. A lot of people are doing these tax things now, but they're not really giving good, solid information. Right. And as always, if y'all look at my playlist called Business Interviews, you'll see all the interviews, including this one that me and Rob have done together. And you can go back and listen to those. And that information is just as relevant as what he shared today. Other than that, I think that's it, my man. Do you have anything else you want to share with the people?
We started this off by saying, please be gathering your documents together. Gotcha. The 1099s, the W-2s, by law, they have to be in the mail by January 31st.
Mm-hmm.
But from the signing business, you already have most of that information.
Right.
So start compiling that information. Um, and, I'm here for you. Like I say, I teach. As many people tell me it's like therapy because, the technical of what you do. I know the business.
Okay.
And so when we get together, it becomes a wonderful combination.
Well, I do have a question that just popped in that no one has asked. You talked about this before, but I gotta ask it again.
Okay.
And so people are getting getting the 1099 sent to them
Okay.
for individual companies. Now, the question that I know a lot of notaries have, do I only, because most people only say, they say, well, I got a 1099 for, for this company and it was more $600 or more. Do some people basically want to know, do I need to only file taxes on the businesses that I got 1099 for? Because sometimes you have a company that you only made $200 or $300 with, and they're like, well, do I need to count that or just the money, that I get from the 1099s? Which, in other words, say if you made 56,000 total, but your 1099 money that you get the paper for is 32,000.
Right.
There's, they want to know, do I record? Do I need to pay taxes or file? Record, the 32 or the whole 56? Which one should I do?
I will share with you this way. You're in business, one, to make money.
Mm-hmm.
You're also in business to make your personal life better.
Right.
I think you ought to record all the income because at some point you're going to want to buy a house, buy a car, and they're going to ask how much your income was.
Mm-hmm.
So the more income you have, the easier it is to purchase something. Now, technically, all of the income that you receive is income. Now, will you get a 1099 if it's less than $600? No, they don't have to, but it's all income. Now, like in my business I'm in, a lot of my clients pay me either in cash or with debit or credit cards. I'm gonna tell you a real brief story. I, prepared a client's return. So he's sitting there. It's just the two of us in the office at the time. He starts looking around and he asked me the question, should I pay you in cash or by check? And I said, doesn't matter to me. I report all my income. He said, well, if I give it to you in cash, you don't have to report it. Yes, I do. It's income. I report all my income. So
right.
That I hope that is the answer to it. Doesn't matter what form it comes in. It's income into your business.
Right.
By law, you're to report all of it.
Correct. That's the key thing. That's what people have failed to realize. And I meant to ask that question earlier, and it just popped in my head. And that's a big one right there.
Yes.
Because some of the notaries, they don't report it. They don't, they don't keep track of it whatsoever.
Right.
Your tips, all of that stuff. That's money that's coming in. That's why income. The word precedes it called income. Right. Not stagnant. We're just sitting here stagnant. Or sometimes, or it's over here in the cloud, but it comes into you and it does a benefit for your life. And yes, because if you want to do something, they're going to say, let me see your tax returns. And your tax return says 32, but you really made 56. They don't know that. They just know
32.
And maybe, with lending practices type, they could look at it as, okay, if you was sneaky to the IRS on how you report it, would you be sneaky with us?
Right.
Because if you're not being honest with them, what's to make us think that you will be honest with us? Right. So put all the dollars and cents down there and you'll be good to go.
Yeah, that's the best answer I can give you is be above board, report all your income, report all your expenses, and we deal with what the net number is. And again, I can show you, I share this with people all the time. I can save you more money than you pay me.
Gotcha.
because there's stuff I could teach you that you didn't know about, that you
Mhm.
could deduct and how you go about doing things.
Right.
So that's how I operate. I can generally save you more money than you pay me.
That's a winner there.
Yeah.
So yeah. Well, party people, I want to thank y'all for hopping on here and kicking it with us today. Really, really, really appreciate it. Thanks, Rob, for coming on, sharing his knowledge. The information is right there at the bottom of the screen. Give him a call and do a Zoom phone call and get yourself together. Him and his staff are excellent. Been knowing them over 20 years. They're going to take good care of you. All right. And Griffin Notary, we're the only ones who putting a real tax accountant out here on the internet for you to hear from, okay, to get your questions answered. So, and we might do a live one day. I don't know. Well, every time we do a live, y'all be taking the conversation down a rabbit hole that we don't need it to be going down and everything. So that's why we pre-record. I'm just being real with y'all because last time we tried to do live.
I tell them this.
Yeah.
Tell them start to compile a list of questions.
Right. Get a list of questions.
And if they send them to you, we'll come on together again.
Yeah. Yeah. So on the post that y'all going to see what the taxes to go QR code, just throw your questions on there. But
Yes.
again, listen to this video carefully. If he's already answered your question, no need to submit it. Whatever he did not cover that you can think of, submit it. Okay. Y'all know I don't have no problem doing lives, but sometimes they be getting crazy with some of them questions and stuff.
They want me to patty cake it, as I say.
Yeah.
Sometimes they don't really want the real answer.
Right.
They just want me to tell them what they want to hear.
Yeah. Hey, I've been doing it
I'm going
sneakily.
to tell you the real deal.
Yeah, they want you to sign off on the sneaky stuff they've been doing.
Yeah, I'm not. Again, I'm a former IRS tax auditor. If they catch me, they ain't gonna have no mercy on me. So I do everything above board. So
there you go. Look, so y'all got it right here. So thanks everybody. Greatly appreciate everybody for tuning in. Y'all have a good one. Talk to y'all later. Peace.
All right.